SpaceX finally went public on June 12th at $135 a share. It's the largest IPO in history, but should you be buying? Hi, I'm Dom Meyer. Today we're looking past the $2.1 trillion market cap to see what's actually happening under the hood of SPCX. The debut was massive, making Elon Musk the world's first trillionaire. But the search interest is hiding a trap for retail investors. Most of you probably think you can snag shares at that $135 IPO price. In reality, that's almost impossible for retail traders. SpaceX reserved 30% for retail, but with over $100 billion in orders, the oversubscription is off the charts. This creates the open-to-close trap. By the time the ticker is live on your app, the price has often already surged past the fair value. Let's look at the hard numbers. CNBC reported some sobering data just days before SpaceX went public. SpaceX generated $18.7 billion in revenue last year, but recorded an operating loss of $4.2 billion. At a $2.1 trillion cap, it's trading at 94 times sales. That is an unprecedented valuation for an industrial company. So why the premium? Most investors aren't just betting on rockets, they're betting on SpaceX as an AI infrastructure backbone. While SpaceX dominates, competitors like Blue Origin and ULA are finally scaling up. The moat isn't as wide as it used to be. SpaceX is also the primary partner for NASA's Artemis program. Government contracts provide stability, but they also bring heavy oversight. The real bull case is Starlink. It's the cash cow meant to fund the Mars mission, but global regulatory friction is mounting. The FCC and international bodies are tightening rules on orbital debris and frequency rights, which could squeeze Starlink's growth. Space is high risk. A single high-profile launch failure could send the stock price into a tailspin overnight. This is why financial advisors are preaching extreme discipline. Most recommend capping any SPCX position at 5% or less. Keep in mind, if you own a NASDAQ index fund, you likely already own it passively via forced index inclusion. Then there's the Elon Musk premium. His focus is split across 5 major companies, creating significant key man risk. If Musk's legal or personal challenges escalate, the SpaceX valuation could be the first thing to take a hit. The manifest is packed. From the lunar lander to the first uncrewed Mars flights, the next 3 years are do or die. Space tourism is another wild card. It's high margin, but one accident could shut down that entire sector for years. Those $4.2 billion operating losses are largely due to R&D. The question is, when does that pivot to profitability? The burn rate is staggering. Even with $75 billion raised, Starship and Starlink will consume capital at a massive rate. Starlink currently has the first mover advantage, but Amazon's Project Kuiper is catching up fast. Competition is coming. Many professional traders are waiting for the first 2 quarterly reports before building a full position. Patience is key. Dollar cost averaging into your position over 6 to 12 months is significantly safer than going all in at the open. Ultimately, SpaceX is a bet on the future of humanity. It's an inspiring vision, but a vision that requires extreme capital. To summarize, the valuation is stretched, the risk is astronomical, and the timeline is measured in decades, not years. If the AI sector experiences a correction, SpaceX could see a massive drawdown regardless of its launch success. The index inclusion means SPCX will soon be in millions of retirement accounts, making its stability a national concern. My verdict? It's a generational asset, but treat it with the caution it deserves. Don't let the hype cloud your judgment. Regulatory battles over environmental impact at Boca Chica are also a looming threat to the Starship launch cadence. Starshield, the military version of Starlink, is another growing revenue stream that most retail investors aren't tracking yet. Investment is about odds, not certainty. SpaceX has changed the odds of spaceflight, but the odds of your portfolio are up to you. Remember the numbers, watch the losses, and always keep your speculative position sized appropriately. If you found this 5-minute deep dive helpful, please hit like and subscribe for more in-depth IPO analysis and market updates. I'm Dom Meyer. Thanks for watching, and I'll see you in the next breakdown. Stay rational, stay informed. Take care.